Good afternoon, everyone. Welcome to this Christie Co Business Outlook webinar. Thank you all so much for joining us this afternoon. So just by way of a brief summary format this afternoon, we're going to be with you until 2 o'clock this afternoon, sharing our insights from Business Outlook 2023 and our outlook for 2024. And I'm delighted to say we've then got a panel with us for a discussion this afternoon as well. So in terms of a couple of housekeeping matters, you'll see there's a QR code on the screen. If you'd like to receive a copy of our Business Outlook reports, then please, if you go onto the QR code and share your details with us, we'll be able to send you a copy of our reports. A benefit as well of doing the QR code is we'll be having a raffle this afternoon. So opportunity to win a £100 Selfridges voucher. Again, please log in and QR code. So I'd like to invite Kush and Dan Goodman to join us, and we're going to just introduce the panel that we have for you this afternoon ahead of Nick and I presenting a short summary of our experience in the market in 2023 and what our outlook and predictions are for the year ahead. So, Nick, do you want to start off with introducing yourself while we're just waiting for Kush and Dan to turn their cameras on?
Certainly. Thanks very much, Courtney. Good afternoon, everybody. My name is Nick Brown. I head up the Childcare Brokerage team for Christie Co. I've been in this sector for sort of 25 years and been working with Christie Co for the last 10 years. So that gives you an idea. We have a team of 8 specialists that deal with children's day nurseries right across and through to the education sectors. And we're lucky enough to be in all ends of the market, right from single asset sales right through to the corporate group sales. So we've got a right breadth right across the sector.
Thank you, Nick. Dan, thank you for joining us this afternoon. Would you like to introduce yourself?
Good afternoon. Hi, I'm Dan Goodman. Nice to meet you all. The company is the Harkalm Group. We are property investors and developers. We specialise in the educational sector. Last year, we acquired and developed 15 nursery settings, developed 15 properties for a host of different occupiers, a range of the big groups, including M Family and Kinder Zimmer, and we work with smaller independents as well.
Lovely, thank you, Dan. And Kush?
Hi, Courtney. Thanks for having me. I'm the managing partner of Birdi Co. I run a legal team of specialists in the childcare and education sector. We act for a range of nursery owners who are either growing their business by way of acquisition or just running their business towards an exit. And we also act on the acquisitions and exits as well, and have them for about, well, the firm's been around for just over 2 years, but I've got experience over the past 7 years.
That's great. Lovely. Thank you, Kush. So Nick and I look forward to discussing some of the topics arising from the presentation in a short time. There's one final opportunity to scan that QR code to enter into our prize draw raffle if you'd like to do so. And then we'll move on to the presentation. So let me just share our Business Outlook presentation here with you. So I'm sure you know that Christie Co produce an annual publication, Business Outlook, in which we look over what's happened in the 12 months in the preceding year, and we look out to some of the opportunities and our predictions for the year ahead. Our Business Outlook publication, it covers not just the day nursery sector, but also a number of other sectors in which Christie Co specialise, so leisure, retail, hospitality, specialist childcare and education. Now, some of the key themes that sort of very evident across last year and the past 12 months that sort of span all of the sectors in which we operate cover and encompass these elements. So there were economic themes, consumer, sector funding and sustainability themes as well. And I think one of the most notable aspects of last year was the changed economic environment. So obviously we saw, following a short premiership from Liz Truss, the preceding year, we saw a significant impact on the economy, and we saw inflation race to record levels, and we saw the cost of capital increase significantly as well. Now, for nursery operators and our clients, those economic pressures did present some really quite significant challenges. So obviously cost of utilities increased significantly, Cost of food purchases increased significantly. And this is all against a backdrop of a very challenging work environment. And I think those economic conditions and how they played out really impacted on the volume of transactional activity. And it's also impacted on overall pricing that was being achieved within the day nursery market. We also, because of those elements, saw sort of significant changes in consumer habits. So in other sectors, you can imagine hospitality, licensed and leisure, there were changes in the way that people were spending their money ultimately. And in the nursery sector, we saw, often a lot of our clients, they did see increased demand from parents as parents became more reliant upon dual income. We saw that post-COVID occupancy continue to recover for many nurseries. And obviously, in terms of consumer demand, I'm sure many of the delegates today have seen a surge in requests from parents for potential new nursery places following spring announcement of the government's early years expansion programme. Obviously, there's a recent article by Cheryl Hadland at Tops. She's seen a 20% increase in demand from parents, as I'm sure many of you have done. And that scheme itself is not without its challenges, as we well know, from a funding perspective and a workforce perspective. Sector funding, that's been a very hot topic. It has been for many years, but I think last year, going into this year, particularly in terms of the level of funding that providers are receiving. And we've heard, over the years about the shortfall of that funding and ultimately the underfunding, and that in itself led last year to quite a sizable increase, teamed with economic and consumer changes and challenges, quite a significant increase in nursery closures, particularly smaller nurseries in deprived locations that arguably are trying to serve children and parents with potentially the greatest need and demand. And then from a sustainability perspective, a very big theme on sustainability became evident and rose to the fore last year, not only just in terms of sustainability of resources you're using in your nursery, but also just sustainability in new nurseries that were being built, the sort of changes in energy performance certificate requirements. And that's clearly a real theme that I know we as business property investors and actually investors and operators are increasingly conscious of, with the importance of ESG policies sort of rising to the fore. So those are just some of the core themes that span across what we've seen in the nursery sector and are mirrored in other commercial business property sectors. But specifically for nurseries, I mean, last year it was a challenging year operationally for many operators. And for us as property experts, it was a year typified really by market resets. And as I said, largely due to the cost of capital and inflation. And for buyers to acquire more nurseries, the cost of raising money for those acquisitions increased. The costs associated to buying property to convert it into a nursery, or for developers wanting to do new build, brand new organic nursery developments, the cost of labour increased, the cost of building resources increased. So all of that did have an impact on the market. I think, as I mentioned before, just the increased cost of purchases, food purchases to try and cater for children in the nursery, providing healthy and nutritious meals, food increases, utility increase, all of that did erode many operators' margins, and teamed with sensitivity around how fee increases could move forward on a location basis. That potentially led to margin erosion, and that margin erosion led to lower earnings in some cases, resulting in lower values. We also saw a lower volume of nurseries coming to the market last year. We'd had a very, very busy year of market activity, a record year of market activity in 2022. And I think stemming from some of that, a lot of the most acquisitive purchasers had been focusing on how to integrate those new acquisitions into their own businesses and ensure that quality and new cultures were sort of embedded throughout the business. So some groups just slowed down a little bit, and some groups actually, lots of buyers became far more focused on what they were acquiring, and there was a real focus on quality. So some of those are the themes that we saw in the nursery markets. The average size of day nursery sold in 2023 from the transactions that we facilitated was 72 places, an increase of 7% from the previous year. And that's really quite interesting in terms of that quest for operators being more strategic and sharpening their focus on acquisitions. So in terms of the profile of purchasers that we saw most active in the market last year, so we saw 44% of purchasers active in the market last year were the corporate acquirers and the larger nursery groups. Now that was a sort of a slight diminution from the prior year, where the corporate purchasers had bought 60% of all transactions that we had facilitated in the nursery market. We certainly saw a bit of an increase in the market from first-time buyers the preceding year, and you can imagine the cost of capital for a new entrant to the sector and a first-time buyer, that became a little bit more challenging, and banks were being quite more refined in terms of how they were going to invest and support new customers with their expansions. But we saw significant growth last year in independent nursery owners, so those owners that have one setting going on to expand and buy a second setting, so a 32% increase. So a buoyant market, but very much a market of a resetted year ultimately. Now, as I mentioned, Christie Co, our business outlook publication, it covers all of the sectors in which Christie Co operates, and we've been tracking price indice movements year on year. And here you'll see that ultimately all of the markets, with the exception of retail actually, had a slight distribution in price indice movements in the past 12 months. And for nurseries, the only time we'd seen another slight reduction in price indices was in that COVID year, so 2020. But overall, I have to say, we fared relatively well with just sort of a negative 3.3 price indice movement against other sectors that Christie Co specialise in. And I think we have fared well given the cost of capital. But that negative movement, comparable to that COVID year, they are 2 years that really buck the trends. And it's quite interesting to look at how the education markets, and notably day nurseries, have fared over a number of years. And here's just a snapshot really of the price indice movements on a sector by sector basis from 2018 through to 2023. And it's actually childcare education and predominantly the early years market that has seen the greatest growth. So over that 6-year period, there overall has been a 25.2% increase in price indice movement in a positive direction, which it compares to the second highest price movement of dental at 15.4% over 6 years, or the care sector with a 6-year price movement of 14.8%. So I think, from our perspective, it's incredibly positive in the context of markets in which we specialise at Christie Co. So just to talk you through some of the sort of small selection of case studies and deals from the past 12 months, I'm going to hand over to Nick now, who'll just talk you through some of those transactions, and they'll evidence the wide breadth of activity and deals that we facilitated.
Thanks, Courtney. And I'll just echo some comments that 2022 was such a big year that we always knew that 2023 was going to be like that. But I think if you look at the first slide here, we kicked off the year with a group sale, which was to Kids Planet, which is the Sunbeams Group. Interesting factor about this is it's a good mix of freehold and leasehold settings. And actually the top left-hand picture shows one of the settings that wasn't actually open. We do come across sellers that have actually got pipeline of other settings that are looking to open, wondering if they can sell with that in situ. And this just shows that this was a 330 place group with the extra setting was due to add on another 132 places. So another interesting fact from this group is, once again, it came from a recommendation that someone else we'd sold for. So it's no better form for us that we're people that we've sold for in the past that come to us and hopefully get the right price. Just to show the different levels throughout the sector that we're selling. I mean, the next picture is a single site. It's quite special, to be fair. It's a 150 place setting, as you can see, a converted sort of Victorian school. This again is sold to Bright Star the corporate operator in the sector. The reason we put this up is because, you know, as a single setting, this was probably one of the most profitable that we ever come across. I can't tell you about numbers, but just to show, even the single sites are super sought after, and in the right locations, making the right amount of money. The competitive tension between buyers is really high. Next slide. Excellent, thank you. The next slide, again, I wanted to mention this is because this setting had been owned by this owner for quite some time and she was retiring from the sector. But interestingly, the buyers to this rural and as you might have seen in the press, you know, Storwell have grown significantly over the last few years, but have recently taken on a capital partner in Graphite who are going to help them grow again. And it's something that we're seeing across the sector where, because it is a green-like sector, you know, funders are prepared to back people that want to grow. And that's got to be a positive for anyone thinking of selling, and also some of these companies that are looking to, you know, to buy and build and add on to what they've already acquired. So a nice story and a lovely setting for them to buy. If we just move to the next group, again, we sold it at the middle of last year. You can see from that picture, it was a group, a 4-setting. That particular setting, there was 242 places. I've been doing this job quite a long time. I've never come across anything of that sort of size for one unit. You can see the top floor there also has a 5-a-side pitch, and to the right hand side is a huge outdoor climbing wall. Things that you don't normally associate with the kids running around and you'd be slightly worried about, but it seemed to work at this setting. That group was bought by family and it's all around Milton Keynes and Bury St Edmunds. But again, every time we come across a nursery, they're all slightly different. And to come across a setting of that size within a group was a challenge for some buyers. But again, another market setting deal at the time it was sold. Just to come right across to the other end of the scale, really, we don't just sell all the biggest nurseries in the market, corporate groups. We often get asked to give advice on smaller settings, and particularly with the YMCA, they approached us that they had a number of settings that they were basically going to close. And our remit really was to, you know, prevent that childcare in those areas from going. So we took that challenge on, and it was quite a nicely run process. And what it showed us was didn't quite work for the YMCA. They actually did work great for other local operators who were actually full and required that space to grow their businesses. And each one of those settings has now gone on to a new operator and is flourishing, which is great to see. And again, from our point of view, it's great to save childcare in those areas where it's most needed. I'll probably jump again right to the other end of the and just into January of this year, and we've just recently sold the Pip and Poppins Nursery Group, a super group really in probably some of the most affluent areas in London and of the country. And again, it just shows to us that this is another market setting deal out of a new year. It's been acquired by Duke's Education and was a competitive process, I'd say confidential, but it just, for us, there is the demand for all types of nurseries, but more importantly, the real sort of profitable settings is outstripping supply. So whilst we understand all the challenges that we're seeing in the sector, you know, there's not a shortage of people looking, you know, to acquire and grow.
That's wonderful. Thank you, Nick. I think this slide in particular just really sort of evidences potentially the polarization of some settings. I mean, there are some settings that are, you know, in challenging locations, deprived locations, serving a high proportion of funded children. And, you know, if the funding shortfalls do not meet the cost of operation, that can be a significant challenge. Whereas there are other nurseries in different locations that might be serving a different parent profile. And actually those nurseries are, you know, doing incredibly well. So I think this is one of the challenges that we have in the marketplace. And I think one of our concerns, particularly for this year, is that we could well see further loss of capacity potentially, which will make it far more difficult for parents to access high quality childcare. This is why funding needs to be addressed. But as Nick said there, a very positive start to the year. with that Pippa Poppins transaction. And indeed, we've actually completed a number of transactions already in the first 51 days of this month, with aggregate values just shy of 50 million. So quite a sort of shift from a slightly more challenged market last year. So it's looking very positive for the year ahead and for the outlook. And in terms of our outlook is positive, but we asked you about what your outlook is for the year ahead. So in December, we did a survey, and we thank you to everyone that contributed to our sentiment survey. And posed a number of questions in December. And as at December, when speaking to nursery providers specifically about their feelings for the year ahead, 44% were positive and had a positive outlook for the year ahead. And indeed, 48% of respondents said that during 2024, they were actually planning to buy more nurseries or buy more sort of properties to expand nursery provision into, with just 15% looking to sell. So from a market perspective, clearly potentially a very high buyer pool, and potentially there 15% looking to sell. We might another slight sort of year where actually fewer opportunities come to the market. And when opportunities do come to the market, that's what drives the competitive tension and competitive processes, because if there's fewer opportunities and you've got a higher pool of buyers, then actually that can get really quite exciting and quite heated. So we're looking forward, and sort of we are positive for the year end. I think our predictions that are highlighted in Business Outlook are, I think we're positive, we are cautiously optimistic. We are aware that the cost of capital has increased, but hopefully with sort of changes in the market and within the banking community, that cost of capital and the rates will start to come down a little bit. We are expecting to see further market consolidation, as we've seen there, large proportion of people looking to buy this year. Expect to see that gather pace as well. But as I mentioned, I think we are fearful. We are very mindful of the sort of rates for the funded places being awarded. We're mindful of that sort of, in some cases, quite significant void between the rate awarded and the cost of delivery. And clearly, that's something which we have been sort of lobbying as a sector to be addressed for a long time. And I think that will be a continued challenge in the short to medium term. But so that sort of really summarises our review of last year and some of our predictions for the year ahead. So we're now going to just pick up on some of those themes via our discussion now. And I'm going to stop sharing my screen in a moment. So there's a last opportunity for you to scan that QR code if you'd like to receive a copy of our report and some links to video commentary as part of this publication. And of course, to register within the raffle or draw it in this afternoon. So that's your last opportunity now. As we go through the panel discussion, please, if you have any questions, Nick and I are happy to answer any questions as our panelists. Any questions arising, please don't hesitate to pop those in the Q&A box. My colleague Vicky is monitoring that box now and will be responding to those questions as we progress. So let me see if I can stop sharing my screen. I think that's done. Lovely, that's great. So here we are. So wonderful. So let's start with, we've highlighted our sort of highlights from 2023. Why don't we start with Kush? Kush, what were your highlights of the past 12 months?
Sure, thanks, Courtney. It's been a really exciting working in the last sort of 12 months or so. I think nursery owners have been obviously very busy with the operational issues that they've been having to deal with, and whether they're growing by way of acquisition or either acquiring existing settings or taking new leasehold properties to maybe convert into a new setting from scratch or exiting, there's been quite a lot to handle. I think that we've definitely experienced a variance on deal timescales. And that has been good, and in a good way and a bad way. So, I mean, we have seen some issues cropping up, particularly on the property side, for example, where we've had to deal with legal issues cropping up, and that has caused a bit of a shift in terms of timescales, deals taking longer. We've also observed that buyers, particularly the corporate buyers, have started much heavier emphasis on their due diligence protocols, et cetera, investment criteria perhaps as well, maybe has become a bit more stringent in terms of their forecasting, et cetera. So we've had to deal with those due diligence demands, and that has had an effect. But there's also been really positive effect as well, and really goes to show that, you know, a well-organized nursery with good record keeping and good financial records, and who have taken specialist advice along the way, it really does pay dividends, especially on an exit, for example, where everything's very organized and things aren't cropping up, and we can present, you know, with selling a nursery, and you know, that keyword selling, you have to make it attractive to the buyer, and that involves making sure all the I's are dotted, T's are crossed, and experience those types of settings. It's been a real advantage in actually shortening timescales. So yeah, it's been a mixed bag overall.
No, I understand that entirely. And I think it's interesting in terms of that trend around deal times taking longer. I mean, it all depends on the complexity of the transaction, doesn't it? So if it's an asset purchase, you have to have an Ofsted re-registration, and that could be up to 26 weeks. If it's a share purchase, it could be significantly quicker, but every transaction has its own complexities. So yeah, insightful trends. Dan, let me come to you next. Dan, what sort of trends did you see develop sort of in the past 12 months, perhaps?
So I think the comment you made within your presentation about quality over quantity, that we saw a number of the groups and the independents focusing on better quality assets rather than you know, just trying to acquire and grow for the sake of growing and trying to increase their EBITDA. Tenants wanted to make sure if they're going to a new setting, they're offering the best facilities for parents to send their kids to, within that location. Also, CapEx was a huge consideration for tenants, and it was also a huge consideration for us as property developers. So whenever we looked at a building, we had to ensure, you know, how much we were going to spend on it to get it into a condition for the tenants to fit out, which obviously comes off our bottom line and the tenant's bottom line. But we had a year. We acquired 12 different properties on a combination of, you know, new settings, whether we're developing it from a piece of land or converting an existing building, or a combination of sale and leasebacks. And we worked with 6 different operators over those 12 acquisitions. So busy, and you know, it's for us really and the team at Harkalm to try and find these properties off market, and using, you know, good agents like yourself. And obviously the benefits of acquiring something off market means hopefully the price is more affordable, and then there can be a rental saving onto the occupiers.
And that's on things off market transactions. If it's outside of the competitive process, arguably the buyer achieve a more competitive purchase.
Exactly.
And yeah, I guess for owners that are selling their businesses, they want a degree of sort of competition confidentially to make sure they get the best price. So it's, as you say, different demands from different types of buyers depending on what you're looking to do. And what I will do is I'd like to pick up on that point later on regarding quality, because I'm mindful that we talk about quality an awful lot in early years, but equally from an operational perspective, we focus on, you know, first and foremost, quality of care, quality of education. And I'm mindful from a business property perspective, we're thinking about that alongside the quality of the assets, in terms of the configuration of the assets, and you know, Kush, expand on the quality of tenure, so the right to occupy that property. So we'll pick up on quality a little bit further. But I'm mindful, Daniel, I wanted to talk to you a little bit about trends in terms of last year and what you saw between any growth in sale and leaseback, and what sort of patterns have been emerging around that. And it might be helpful just to explain to the audience in terms of quick definition of sale and leaseback for those that might not be entirely comfortable with that term.
Of course, we did actually see an increase in the number of sale and leasebacks we did last year. So essentially what sale and leaseback is if you're a nursery owner, you own the actual property within, well, you're the freeholder. And then in the process of a sale and leaseback, you'll simultaneously sell the property to a company like Harkalm, and a lease will be granted at the same time. So you'll still have the property, but it'll be on a leasehold basis. So you'll also be paying rent on a quarterly basis, a monthly basis, but the freeholder will be Harkalm or the property company. And the benefit of that, and why I think there was a big increase last year, was for the release of capital to nursery owners, which enable them to grow, or if they've got financial responsibilities or liabilities, they can pay off those liabilities or help them grow because they've got an increased amount of cash. And we did a number of sale and leasebacks last year and got a number on the go this year, and it is certainly an increased trend.
Okay, that's really helpful. Nick, is there anything you'd like to add to the comments around sale and leaseback and what we've been seeing in the investment market from that perspective?
I think there's a couple of things just to pick up on a thing that Kush said earlier as well, is about deal times. I think invariably the common denominator there is deal times. Why they get longer is down generally to the vendors, not the buyers. And it's all about quality of information they've got to hand, and no one quite realises the depth of some of that information, how far they have to go. So whilst everyone might chuck and look the blame somewhere else, it actually does boil down to that. So preparation is absolute key, and sometimes we're talking to people 2 and 3 years before they start and actually come for sale. So I thought that was an interesting point. I think the point about quality is definitely a relevant one, and just to stress that people are looking to buy right across the UK now. There used to be a time when every third phone call we got was, have you got something in London and the South East? That has now changed, and the demographics have changed, and the demand for people looking to buy is right across all the capitals, and obviously right the way to Scotland as well. So that's been an interesting sort of dynamic to the market. So just touching on the sale and leaseback, we've seen an increased demand for that. We've seen a lot of deals where vendors have retained their properties as part of a transaction because they might have thought it was a good pension fund for them, but also the sale and leaseback option has given them the chance to. There's a lot of sellers that are asset rich, cash poor. They want to continue running their businesses, but they want to release some capital. So we found that that's been a great route, and it's become a topic of conversation. As people see other people do it, and actually, like I say, they can continue running their businesses, but also get a huge cash injection for themselves for the hard work they've done. Don't quite want to retire yet, but also in a nice long lease that they can release that money. So it's an interesting trend across the market, CD, to be honest.
And I'll add to that as well. I was just looking at stats this morning in terms of the nursery businesses we've sold so far this year. And actually, 88% of the transactions we've done this year in January have been leasehold transactions. And in 8 of those transactions, our client, the vendor, retained their freehold property and they granted a new lease to the ingoing purchaser. So you can see, as you say, that trend. I think last year we had a very high proportion for the whole year of leasehold transactions against freehold. And it's that income for the outgoing owner. And where else would they deploy their capital potentially? So
I must say, also, if there's a good group or an independent group that comes onto the market, and if a nursery owner can't afford to buy the freeholds, that's where it can be a really benefit to team up with something like Harkalm, where we can buy the properties and then the nursery operator can obviously contribute to the business. So it can be a really competitive bid, and it could be the difference between succeeding in a competitive scenario or not. So it's please reach out. We're here to help.
No, there's that element, Dan, and also I'm mindful in terms of we were talking before about expansion, and as you rightly say, the ability to sell if you were wanting to expand by an organic new nursery development, very mindful of the government's extended entitlements programme, and obviously sort of potential challenges around capacity and the need for more nursery places amid workforce challenges that are prevailing, to release some capital from your freehold to be able to go and sort of invest that into another nursery in close proximity to meet capacity. That's another option there as well, isn't it? So I think just going back onto Kush, I've got a question for you, Kush. So I'm very mindful that you indicated that you set up Birdi Co just a couple of years ago following your sort of lengthy legal career in the sector, and I'm mindful that last year we saw an increase in first-time buyers and new entrants to the nursery sector. So from a legal perspective, if you were advising someone that isn't currently a nursery business owner, but they're thinking that they'd like to set up in the nursery sector via an acquisition or a new nursery, what sort of top 3 things would you be sort of being mindful of to advise someone new into the sector that they should be thinking about?
Yeah, absolutely. I mean, of course, from a legal perspective, I mean, there's loads of things that we could talk about, funding, et cetera, et cetera. From a legal perspective, I'd firstly say, again, coming back to the issue of quality and that topic as well, if you're looking to get into the sector, you want to get into a setting or acquire a setting that has the quality. So I'm talking about the good record keeping and making sure that when you're entering the market, if you are entering the market for the first time, that you're coming in on the front foot. So you want to get into a setting that's got really good record keeping, you're doing adequate due diligence. And I think when we represent acquirers, we're always thinking about the other side as well. And I think, much of the work of, obviously by entering the market, you might not be thinking about exit straight away, but it is relevant. And some of the work is done at the acquisition stage. So one of the most important things is making sure that you are undertaking the right levels of due diligence and not just trying to, I think Dan touched upon this earlier, just acquiring for the sake of acquiring. So that's the first thing. The second thing that I would say is ensure that you're working with a legal team that actually, and just general advisor team that has expertise in the sector as well, because there are specific nuances that come up across the sector, and it's really important that when you're getting into the sector, you're aware of those and you're being advised of those in the correct way, so that it's not coming back to you later. You might pay a little bit more in terms of legal fees, etc., for a specialist, but that will pay dividends. And then, I mean, this is not necessarily a legal point, but just understanding the market and connecting with people in the market and being out there, having your ear to the ground, understanding what's going on, because that's the way that's really going to help you. Not just legal, it could be legal, but from a wider perspective as well.
Really helpful, thank you. I just think it's expanding on from that point, some of the things that crop up from a due diligence perspective is the topic of, and I know that Daniel will have experienced this, it's the topic of planning and conditions of planning around capacity and Ofsted. So, sort of time and time again, I would say on so many transactions, something that can frequently crop up is that essentially there might be an original planning condition from when the property first started being used as a day nursery, and the planning condition may have said may accommodate no more than 60 children at any one time. And then over the years, Ofsted have visited and you've done your floor area surveys, and actually, while you've got a condition for 60 places on your planning, the property might be capable of accommodating 80 children from a floor area and operational perspective. So I don't know, Dan and Kush, would you like to sort of share your insights around that and how providers can try and be more mindful of that, whether they're looking to buy or even existing providers today that actually might be trading at a certain Ofsted capacity, but might have actually forgotten what their planning permissions were?
Shall I start, Kush? I'll just do it very, even from an organic growth perspective. So obviously, a few years ago, day nurseries fell into Class E, where previously it was D1, which is why I think there's such a huge expansion, initially when Class E was open, because it means nursery operators can look at things like restaurants and offices, and it really opened up the market for new growth. But even though there's, for example, an office block with parking and outside space, you'd think it's absolutely fine. A nursery occupier can slot in, do the fit out and go. Normally, there's a historic planning condition associated to the office block, whereas for example, there has to be X number of car parking spaces remaining. But the nursery occupier wanted to remove some car parking spaces to create a bigger outside space. And also with existing nurseries, you said there might be a limit on capacity. The only way to dig down on that is basically do your planning due diligence, and that can be via your solicitors when they do their searches, and Kush can touch on that, where they'll come up with a limit or a capacity number, or you instruct a planner to do that DD and say, this is it. There's a capacity of 60 kids in the setting, and you're going to have to basically discharge that condition by submitting a new planning application and tell the local authority how many kids you want in the facility.
Yeah, absolutely.
Go ahead, Kush.
Yeah, thanks. Yeah, it actually came up for us on a deal not that long ago, that specific point. And of course, the risk is if you're operating higher than the allowed planning permission for number of children, for example, then of course, then you could be breaching that planning permission, which risks enforcement action, etc., etc. Worst case scenario, of course, closure. And I think it can apply to other things as well. So even like opening times, if you've got conditions attached to the planning permission that's available for that setting, and you've got Ofsted approval, or you open certain times and the planning is different, more restrictive times, for example, then that's going to be a risk of planning breaches as well. So, I mean, when we talk about expanding as well, I think it's also relevant when you are doing your due diligence, not to just check these things, but whether there's any potential for maybe changing those conditions if necessary and justifiable. And of course, a planning advisor or consultant would be able to support with that. So just to add that on as well.
I think
that's really helpful.
Just to add to that, Courtney, it's just what do you do when you find out? And often this is late in the day when we do find this out. And I think the perception is we've been doing this for 10 or 15 years. It's not a problem. We can get this changed. I think I'd probably dispel that fear that theory that to get it changed is a possibility, and to get retrospective planning to get things changed. It's not that simple, and one of the biggest sort of hurdles to that is probably highways, because suddenly everyone's then getting told that all these cars could be coming down this road or whatever. So whilst we see it quite a lot, and again it's become a hot topic because it has seen more and more in the sector where people have grown organically and added extensions on. Got the right planning to do that, but not got the right planning via highways to suddenly. So it does happen. It can be changed, but it's not a quick process. And when you're at the final stages of a sales process and suddenly these sorts of things crop up, it can prove problematic.
Agreed. Thank you, Nick. Nick, I'm going to come back to you in just a moment with another thought arising from comments made there. But in the interim, we have now received a number of questions and they're just being collated. So I'm going to ask the panel some of those questions in just a moment. But if you would like to ask our panel any questions, please do feel free, put them into the Q&A box. They'd love to respond to your questions and queries now live while we're on this webinar. So while people think of their questions and pop them into that Q&A box, and we'll go through those in just a moment. Nick, Kush was just talking then about, we were talking about new entrants, and he mentioned about, obviously, when you're coming into the sector for the first time, actually very few have an exit strategy in mind at that stage. And I think, when you look at, say, investors coming into the space, they're moving into a sector, be it the nursery sector or any other business sector, and they always have the exit strategy in mind. And obviously we spend a lot of time helping owners prepare for their exits, but I'm very mindful that ultimately you might have an exit planned down the line, but anything can happen in the interim that's outside of your control, health related matter or a sudden change in circumstances. What would you say, I'm putting you on the spot, Nick, but what would you say are the most sort of prevalent things that everyone on this call should be thinking about, even if they're not thinking in of selling in, say, for 5, 6 or 10 years or 20 years down the line, but what things are most essential for them to have in order now?
I think the word I'd have to mind is you're trying to future-proof your business. So there are always nuances to what people want to buy. Now, if someone wants to buy a very small nursery in a church hall that suits them down to the ground, it's a perfect buy for them. Their exit strategy is going to be different to someone that's thinking, I might want to sell this at one day to a corporate acquirer and get a premium price for it. So, I mean, the boundaries are there, aren't they? You've got to be thinking about, if I'm buying this nursery, it's a bit like when you buy a house. What can I do to it? How can I add value in some ways? And that might just be, making the best of what you've got. But if you're, as you've seen through some of this presentation, if you're acquiring a 40-place nursery and it could never get any bigger, it doesn't mean it will never sell to anybody else, but your pool of buyers is slightly different to if you've acquired a 70-place nursery that you could add on and make bigger and expand, then suddenly that opens it out into a different sort of buy, a range of buyers. I think you've always got to have one eye on, listen, we had a situation in the market where people were building 200 place settings at one stage and they thought that was going to be the way forward. And it's worked out that that's not been the way forward. And actually, you know, the premium sort of size for nurseries is probably 70 to 100 places. Some are bigger than that. But the market does move, and it depends where you are in the world as well. You know, if we bring some smaller settings in the most prime areas of the country, they're still going to be very, very sought after. If they're in the upper echelons of the Hebrides, they're probably not, but they might suit you for your one business that you want to buy. So it's not one size fits all, but I think if you've got an eye on what are you going to do with it at some stage, are you going to either want to pass this business on to your family, or are you going to want to sell it? If you're going to want to sell it, what would you be looking for? And that's why it's good to talk to brokers, to lawyers, to investors, and get their feel for what they're looking for, because it generally stays on a similar sort of theme.
Excellent, helpful. Thank you very much, Nick. Right, I'm literally being passed lots of questions that are coming in on the Q&A box, so we're going to fire into those. So let's start with Dan. So Dan, we've got a question from Riz Said here. So what do you see as the ESG challenge? Sorry, what do you see the ESG challenges will be in the sector, and EPC rating effects on valuations? That's a question that's been posed for Dan.
Brilliant question. I'd love to have a crystal ball to answer it. So anyway, I'll do my best. So ESG, as a property company, we're really mindful of our ESG, and where we can, we obviously help and contribute to the environment. How does it affect the nursery sector? EPC is a really big one, especially if the government install the new initiative where I think it has to be a minimum of a C, which is achievable in some circumstances, especially if the building doesn't have gas, which can increase the EPC quite quickly.
Dan, I'm just thinking some of our audience might not know what an EPC is. Do you want to just very briefly explain what an EPC is? They might not have come across one before.
It's an energy performance certificate. So it's essentially how efficient and how much energy consumption the building consumes. A is the top, so that's the best rating you can have, and then it goes down to, I can't remember, it might be a G or something like that. But the government they're threatening to change legislation where all commercial buildings have to have a minimum of a C. Which is going to be tricky to govern, especially if there's already existing EPCs in place and there's tenants in place. The argument or the debate would be who's liable to get the building up to that C and who spends the money to get it up to that C. So that's a really big point of discussion, especially on new leases. And it's a commercial negotiation depending on the state of the building. If it's a new build, for example, we'll build a 6,000 square foot new build for a nursery occupier, we can achieve that level quite comfortably, and we'll take on that liability. If it's a listed building or a building in a conservation area, it's going to be more tricky to get that C, and it's really a case of being commercial and working as a landlord and a tenant to try and come up with a compromise.
Okay, that's really helpful. And yeah, I think that's very helpful. You're quite right. A real breadth of different properties with different sort of EPC challenges there. I've got a couple of questions here for Nick. So, and actually probably Kush as well. So Nick, with a leasehold setting, what's the preferred length of time to run remaining, or the minimum? So talking about leases, what are buyers looking for when you're selling a leasehold premises, a leasehold day nursery? What do buyers really want to look for? How long should be on that lease? And actually, Nick, before you answer that, can I also add in, can you also just quickly explain to the audience the difference between a lease and a license? Because I know that's one that crops up all the time as well.
Yeah, I think let's just talk about the term to start with. I think it's very important because that's led by your funders generally. So whenever you're taking anything on, the length of that term is going to dictate to you if the bank is going to be keen to be able to lend you money. If it's a 12-month lease or a license, which we'll come back to, you're going to struggle because in theory someone can kick you out in that time. So we work off the premise that anyone that's coming to us and saying we want to take on this lease, you'd normally want to have at least 10 years left on that lease. Now, in reality, that's not necessarily going to happen because it could be an original 10 and it's got 3 or 4 years left. But I think part of your negotiation would be making sure that that is going to get renewed. Now, that could be within the Landlord and Tenant Act, which gives you an automatic right of renewal. That is a sort of safety net, but it's not 100%. So it's something to look for. But I think really, if you're putting me on the spot and saying what's the minimum term you'd be wanting, I said for me it would be you'd be aiming for at least sort of 10 years. I mean, we've had circumstances where there's 25 and 30-year leases, and which is absolutely great for security of tenure, and then everyone's worried about signing a 30-year lease because they've got a commitment for 30 years, so they look for a break clause. But I think there's an inherent difference between the term of leasehold and license. You probably, as an easy way to explain it, you're probably getting less security of tenure as you go into licenses. You know, they're quite common on buildings that perhaps you're not able to grant a full scale lease on it. Again, it just depends on your risk appetite. But I think most buyers, once they go to anybody that says, "Will you lend me money on this?" will want to see that sort of length as a minimum. I don't want to frighten everybody that's got less than that because obviously they can be renewed. But if you've got a 2-year rolling lease, I think that obviously falls straight to value of what you'd be able to achieve.
Okay, very helpful. Also, I'll just add into that. So last week I received an inquiry from a lady who has a leasehold nursery and she's coming to the end of her 10-year lease, and she had negotiated a new lease, a new rent to go with a new lease between the landlord, and she reached out to sort of to indicate that she was under negotiations with the landlord for a new lease to be on a term of a rent of £50,000 per annum. And she wanted to just double sort of sense check that was the right tone of rent. It transpired that entire area has changed in the past 10 years in the term of that lease. And actually, the market rent is significantly beneath 50,000. And the reason why she reached out to us because she was mindful that if she agreed a new lease at a rent that was way above market, that obviously would be quite unappealing to a buyer. So I think that's a very big factor as well, not just around the lease length and terms, but is your nursery, at market rent? Is it over rented or under rented? That are all factors that come into play, and our landlord and tenant team can help on that. But staying with leaseholds, Nick, I'll keep it brief, but another question from Riz: what is the range of multiples for leaseholds in 2024?
Oh, I knew I'd get it.
I know it's a popular question.
No, just one quick thing on what we just said then is, and the amount of vendors that come back to us and say, but we've been here 20 years, even though we've got a 3-year rolling lease, we've been here 20 years. They obviously want our rent. They do. I can tell you now, once it gets into Kush's inbox and he starts looking at something like that, it doesn't make a lot of difference. You've still got the problem where you could be kicked out. So it's one to cover off. I think just on the multipliers, this is one thing that's changed in the sector. I get asked this question a lot. There's obviously a difference between a leasehold multiplier and a freehold multiplier as a rule of thumb. That gap between those two has got significantly closer because the market the demand for leasehold settings has got more and more. So the demand has pushed that multiplier up. Very strange thing to say. One's got an asset, one hasn't got an asset because one's freehold and one's leasehold. But that's just the way that the sector's gone. I think I don't want anyone walking away from this presentation and I want to give them the wrong advice, but if you have got a real low 10-year rolling agreement, then the value and multiplier of that is going to be, very low in the 1s and 2 times sort of thing. Now, if you've got a setting that's on a real secure lease that's making $500,000 EBITDA, that's going to be really sought after by the top end of the market, and that multiplier, could well be in anything from 3 to 6 to 7. I mean, we've done individual settings greater multipliers than that, but I think they're all of their own, have to be dealt with on their own basis. I think most people probably on this call would recognise that leasehold settings used to be 2 and 3 times their EBITDA. I think the good news is that has lifted for the right stock. So if the market does settle and the inflationary and all the things that Courtney's talked about has a pressure on the market, we're still better than we ever were 10 years ago. The demand and the price that people are paying to help people exit is higher than it's ever been. So if we can just keep that as it is, I'm sure there'll be a lot of happy people out there.
That's great. Thanks, Nick. I know that's a question we are asked all the time, and it's so difficult to answer because every nursery is an individual nursery, different locations, different lease terms, different fee levels, different demographics. So it is a really difficult one, but that parameter hopefully will help. And I do have another question here for you, Kush. So, Kush, what are the main issues experienced when looking at existing leases? So if you were, say, helping a buyer and acting for a buyer on a leasehold nursery, what are the main issues that you might come up against?
Yeah, really, really good question. So we do come across a few sort of common ones, and then there's also ones that just crop up from time to time. So we were just talking about sort of lease versus licenses. I think that if you're looking at a lease document that I mean, the point I'm trying to make is what the document states on the top of it. If it says a lease, it's not necessarily a lease if the terms of that lease don't fulfill the legal criteria for being a lease. Sorry, that might be a bit of a mouthful. But I think it's not just going back to the previous question. This is not just about the term of the lease. It's what are those terms? And if we are acquiring, for example, we will look for terms that would potentially result in financial expenditure, which might be onerous. For example, onerous repair obligations. We see wording such as sort of substantial repair and condition, where the lease can require you to bring the property up to a greater standard of repair, even though it's not currently in a great standard of repair. So that's something that we look at, and that can actually directly hit a buyer's bottom line by being required to make significant improvements to the property, whether that's at that stage or later down the line when the leases come to renewal or that kind of thing. So that's something that we would look for. The other thing that we would specifically look at, and what we do see, are break clauses. So it's not uncommon when we act for acquirers, we'll negotiate a 15-year lease. Maybe there'll be a break clause every 5 years, just to try and hedge a bit of risk. But often, well, in fact, most times there are conditions which are attached to those break clauses, which might incur like a financial penalty, a quarter's rent to break it the first 5 year, or some other kind of no other technical breaches of the lease. And these are kind of potential ways that the landlord can potentially resist the break clause being exercised. So we'll look at those things. Sometimes the landlord might have a break clause on the lease, the right to end the lease early, and that's something that you wouldn't want if you've gone and negotiated a 10 or 15-year lease, thinking that you've upheld the value of your nursery, but actually the landlord's got a right to end that lease, on 6 months' notice. Then we would be looking for those kinds of things. Those, I would say, are some good examples, but there's many, many more that we could go into.
No, that's really helpful in a succinct summary. Dan, is there anything? Obviously, you deal with leases sort of significantly as well. So is there anything you'd like to add to that conversation?
Yeah, to be honest, the majority of leases we enter into with tenants are a minimum of 20 years. So it gives security with no breaks, or landlord breaks or tenant breaks. So it gives security to the tenant and to the landlord that you're going to be in occupation for the minimum 20 years. And also in terms of rent reviews, we usually have them index linked with capped at 4% and called at 2%. Again, that can help the tenant crystallize what the review is going to be in 5 years' time, and it helps the landlord also crystallize what income we're going to be receiving in the next 5, 10, 15 years. And essentially it does save in the long term in terms of not having to instruct a rent review surveyor if it's an open market review to set the rent. So they're the main things we look for also.
Okay,
I think just to add to that, Courtney, it's just really interesting. Going back a step, we said, preparing yourself for what could happen in the future. What might be right for you now? Oh, I've got a nice break. The landlord's got a break, just in case we can all get out. Actually, that could be something that drags you down later on. So what you agree to now, which is what getting the right advice, can affect what your value is in 10 and 15 years' time. So it is always good to get that perception of, what would this look to me when I try and exit?
Okay. Oh, no, thank you, Nick, for that. I'm very conscious of time. We do have other questions that are in the Q&A, but what we'll do is we'll take those offline and we will respond to individuals with answers to those questions that have been raised. So we'll do that. I'd just like to sort of round up and ask the panel for their sort of maybe what their predictions are for the year ahead. So, or either predictions or what they're looking forward to in the year ahead. So, Kush, do you want first?
Sure, absolutely. I think it's going to be an exciting year ahead. Of course, there are like challenges and topical issues, but ultimately the sector as a whole generally is resilient, I would say, and I think that will show itself again throughout the year and beyond. So we just have to kind of be mindful of the ongoing operational issues that the operators are facing, et cetera, et cetera. From a legal perspective, I'm really looking forward to seeing some of like the smaller groups. Actually, I'm seeing them gain confidence actually in terms of acquiring and those kinds of conversations, which is great. So we've supported acquirers and kind of dipped their toe in, and then now they kind of got a bit more confidence to acquire. So seeing more of that. Yeah, that's what I'm looking for.
Excellent. All right, thanks. Dan, what's your predictions or thoughts?
Yes, we're really excited about the year ahead, and we've set aside a healthy budget of treasury continually to in this, actually set £30 million to invest into the sector in 2024. That's a combination of organic growth, whether that's new build nurseries or conversions of existing buildings or selling leasebacks. So it's a sector we're invested in, we'll continue to heavily invest in. It's just speaking to the right occupiers and finding the right opportunities for it, really. But it's gonna be exciting. I think the general election in October will have an impact in the second half of the year, where people will probably just sit back and try and see where the markets go. But hopefully people can take advantage of some uncertainty and take some good settings and move forward.
Lovely. Thank you, Dan. Nick, finally, coming on to yourself.
Oh yeah, I mean, we're super excited about this year. We can see already it's already heating up very nicely. But I think the other point I'd just like to add in to people on the webinar is that it isn't all just about sales for us. It's about helping people and giving advice. So, we take great pleasure in giving people good sound advice, and then they go on and they come back to us in 5 years' time. We've got something, and that advice we gave has really helped. So, we can see 2024. It's going to be busy. But it's going to be busy right across the sector, from small settings to big settings. So yeah, hopefully I'll get some holiday in by the end of the year.
I don't know about that. We'll have to see. But no, it's really positive outlooks from all of our panelists there. So just in terms of wrapping up for this afternoon, I'm mindful of time, so thank you everyone for staying with us. So we have a winner for our £100 Selfridges voucher, and our winner is Andy Melbourne, camp from Willow Garden Day Nursery. So congratulations, Andy. We have your contact details. We do. Vicky says we do, and we'll be emailing your £100 Selfridges voucher to you this afternoon or first thing tomorrow morning. So leave that with us. Congratulations. I'd like to take the opportunity to thank our panelists this afternoon for their time and contributions in what I really hope the audience have found to be a helpful, insightful and interesting debate. So thank you very much to Kush from Birdi Co. Thank you to Dan at Harkalm. And of course, thank you to my colleague Nick here at Christie Co. I hope you've enjoyed this afternoon's session. I'm conscious we seem to have gone off in a tangent in lots of different directions. We've spoken for much longer. If there are certain topics that you as an audience would like us to focus on and feature during the year ahead, please don't hesitate to drop us a note, and we can happily look at creating webinars to things and topics that will be of interest to you. If you're attending the Nursery World Show this weekend, then I'm going to be there on Friday. I'm actually at the Nursery Business Summit and I'll be on a panel with Neil Leach and Juno Sullivan, Elaine Sager, discussing early years and quality. So if you're at that event, please, and you see me, do say hello, and I'd love to connect with you. And again, thanks to our panelists, and I wish everyone a lovely afternoon, and thank you for joining us. Thank you all.
Thank you.
Bye.
Bye.